With all of my years in real estate, I see landlords make a ton of mistakes. And I see 3 major mistakes that cost landlords thousands of dollars, get them stuck with lousy tenants, and often prevent them from being able to liquidate their assets when they need to. I want to share those mistakes with you so that you don't make them and you can be successful along your real estate journey. Let's dive in. Hey guys, I'm Andrew Lewis, real estate investor and entrepreneur with over 10 years experience building and growing a real estate team and investing in real estate. Before we jump into today's video, make sure you hit that like button, leave us a comment with any questions or thoughts you might have or future content ideas you'd like to see. And as always, hit that subscribe button so you don't miss out on future videos. I am here to help you break out of that 9-to-5, gain financial freedom, and grow wealth through real estate. Mistake number 1, landlords forget to raise their rent. Or maybe they don't forget, maybe they just have a sweet family in there that's been a great tenant and they're scared to raise the rent because they're scared they're going to lose that tenant. I totally understand that. But you have to be thinking about further down the road. If you're not raising rent, number 1, you're not even keeping up with inflation. You should be at a minimum raising your rent by 3% a year just to keep up with inflation. And a 3% increase isn't gonna hurt anybody on a yearly basis. So don't be scared to go at least 3%. And then from there, you just wanna at least keep up with the rate of inflation so that you can continue to grow that rent and keep up with current market rents. What investors forget to think about here is that if you keep the rent the same, if you rent it out for $1,500 a month and you're still making money and that's great, but if you leave that for 10 years and you need to sell that asset for whatever reason to invest in something else, or you're ready to cash out of the real estate market, unless your tenants moved out, you're not going to find a real estate investor that's going to take that on because market rents have moved tremendously beyond that $1,500 a month that you're charging. So market rents may now be at $3,000 a month, and a real estate investor would have to come in and be okay with losing $1,500 a month to your current tenants to take over your property. I take phone calls all the time from real estate investors that want to sell their properties, but they haven't kept up with market rents and it's prevented them from being able to sell their home, and they've had to seek alternate ways to tap into that equity. So make sure that every single year, at a minimum, you're raising your rent by 3%. Mistake number 2 is a big one. You need to make sure that you screen your tenants properly. I see investors all the time rent out to friends and family members or just some random person that they got in contact with without ever running credit, verifying income, running background checks, all of those pieces. They leave them out and they simply let someone sign on the dotted line because they say they can afford it. I'm telling you, that is a risky business to be in. It could cost you thousands of dollars and may even lead to an eviction or thousands of dollars in legal fees to actually make that happen. So you need to screen your tenants properly. You should be using a property management company to do this. There's other tools you can use. I've had clients that have used Zillow. They have a screening process, an application process, but you want to make sure you've got all of the information to make sure that your tenant is well qualified. You want to make sure that their credit score is up, that they're making on-time payments, that they don't have defaults on other loans, because guess what? You're a creditor essentially to them and you're going to be taking monthly income. So you need to make sure that they haven't been bailing out on paying other people as well. Then you want to make sure that their income is 2.5 to 3 times at least the amount of rent that they're gonna be paying. I actually just talked to somebody that got into a rental. They don't even make a monthly income enough to cover the actual rent, and the landlord never even asked them. It's a scary situation. I see an eviction coming down the road for that person, and I don't want that to happen to you. So make sure that you screen your tenants properly. Whatever you pay a property manager or a screening service, I promise you, it is well worth it. It's gonna save you the headache, and you can rest much easier knowing that you can count on that monthly rent check coming in. Mistake number 3 is wanting to buy a real estate investment property in the cheapest areas. Now, this one obviously comes way before you ever put a tenant into the property, but I get calls from investors all the time that are looking for the cheapest possible deal. That doesn't equate to the best possible cash flow or the best possible tenants. You want to do a ton of research about where you're going to be investing, and you want to make sure that it's a great area with great schools, good crime ratings, rents that are up compared to other areas, make sure that you do that research. Just because you can buy a home for half the price 30 miles down the road doesn't mean that that's the best possible investment. Now, just because it's cheaper also doesn't mean that it's a bad investment, but you just want to make sure that you're doing your due diligence and making sure that there's good rents to be had, good tenants to be had, that there's good vacancy rates, and that you're able to keep people in those properties for long periods of time, and that there's no major companies in the area that may leave or anything like that that could cause tenants to need to move out and move on. So do your research. It's going to be well worth it. Make sure that you're spending money in a smart place that's going to actually make you money year over year. As I said, you are going to make mistakes when it comes to real estate investing, but I hope that you can at least avoid these top 3 to make sure that you're not costing yourself money when it comes time to having to evict tenants or buying in the wrong area or not consistently raising that rent enough. I hope that you can avoid those mistakes to continue to have a smooth process with your real estate investing. Thanks for watching. As always, be sure you hit that like button if you enjoyed today's content. Leave a comment about any questions or thoughts you might have or any mistakes you've made. We'd love to share them with the community. And be sure to hit that subscribe button so you don't miss out on future videos. I am here to help you break out of that 9 to 5, gain financial freedom, and grow wealth through real estate. We'll see you next time.